Jack Mallers just can't get out of the headlines these days. So Strike, which is his payment company, is looking at issuing essentially 0% cost for purchasing Bitcoin through them. So they're going to roll this out slowly. It's only a beta phase and you have to sign up first, but it should be like 0.03 or 0.3% fees for buying Bitcoin through their platform. Strike itself is similar to Venmo. It's an app, you can download it today, and it has a very similar feel to anything like Cash App or Venmo. And you can just buy Bitcoin through it now, or at least they're slowly rolling that out. They're taking a big shot at Coinbase, Square, and Venmo and PayPal itself by making just fees extremely low. So interesting to see them roll that out. It seems like a very natural next step for them. They made a point of saying that they're not going to make much money on this at all, if any. So that's interesting to see that they're kind of rolling out some products that I don't really know how Strike or Zap, the parent company, makes money. Zach, your high level thoughts on this one?
I think the Wall Street analysts really called this one when Coinbase went public, right? They said, "Hey, we've seen this in the traditional brokerage space. We're going to see it in crypto. There's going to be a race to zero for transaction fees. And if you're Coinbase and your retail business is largely supported by transaction fees that tend to be quite high, that's going to be a problem for your long-term earnings." So credit to them, credit to the analysts who called this one. And I think this is the first sort of opening volley in what's likely to be a long process toward that race to zero, right? You know, here he's saying, hey, hey, Coinbase, whatever, I'm ready to take you guys on. Let's go. I got no fees. Let's do this thing. And I think that other people, be they centralized exchanges or be they even decentralized players who get spun up on bigger and better infrastructure going forward, I think we are going to see this race. And this to me is that, that firing gun for the race to zero to begin. So that's my high level takeaway on this one. Interesting that Jack Mallers here is calling Brian Armstrong out by name in his traditional cavalier fashion. So it's fun to see a little bit of the showmanship on display as well.
Yeah, one quick point. I don't know if this means that Insight is already priced in, but Coinbase stock's actually up a little bit today, so people are not panicking at this news yet, or maybe they already got the panicking out of the way.
Maybe it's the Binance. Maybe it's the Binance rumor.
Yeah. I'll also add that when we're talking about like trading fees, it's sometimes not quite as clear as it seems when companies say, well, we have 0% trading fees, and you've got to look at the spread, right, between people who are buying and selling the crypto, because a lot of these companies, they'll say, well, there's zero fees, but then they'll charge you like 4% because there's a spread, and they're just kind of getting your money by just giving you less crypto for your fiat. That's something that I discovered with my traditional banking account in Australia years and years ago. When you try to send money over to America, you got to deal with exchange rates, and then they say, well, there's zero fees, and you look at it and you literally lose 4% on your money because the amount that they're willing to buy back your money is not the same as the amount that they're willing to sell it. So it is interesting that Strike actually clarifies this. They say that the 0.3% fee will only cover the spread charged by the market making firms supplying the Bitcoin. I wonder if it's the I'm having trouble parsing that. Is that 3% fee that the market making firms are charging, or is that 0.3% spread between prices? Because I'm not sure how they could guarantee that, but I'll throw that to you, Will. Maybe you have some insight.
Yeah, so it looks like from the article itself, we're talking about the fee going to the market maker. So whoever Strike has tapped to be the market maker behind the scenes on this is working with that spread. That I think they're getting most of that. And I'm assuming that they're just kind of seeing that if they have a high volume through this customer facing app, then they can kind of take in more money over time, because that's a pretty low fee historically. Looking at some of the other exchanges, like we said, Coinbase is like 2.5% and Cash App is like 2.3%. So it's like a huge difference. And of course, there's a few other fees you have to think about when you're doing this, like the mining fee. If you're going to pull the Bitcoin back into your own personal wallet, then you have to pay that, and that can be like very variable. So yeah, there's a lot more here than just meets the surface, but interesting that there is a race to zero here, as Zach said.
One quick note, I looked for numbers and I couldn't find exactly the clear ones, but it seems pretty likely that Strike has much lower app install base and user base than the likes of Coinbase and Venmo in particular. So it's worth pointing out that, you said they don't expect to make money on this. It's essentially a customer acquisition play among probably other things.
Yeah.
So they benefit from even not making money because obviously people are going to transition. So that's the play for Strike and for competitors.